Hello investors, it's Stuart Cruz with Cruz Asset Management's video chart of the day, and super hard not to talk about the earnings action that happened last night. We had about 25% of the S&P 500 by market cap reporting. Facebook, Apple, Amazon, and Alphabet. If you throw in Microsoft, that's 25% of the S&P in just those 5 companies. So what we have up here is a 5-day chart of the S&P 500 from our friends at Y Charts. And we're up about 1% on the week. Not bad, percent. If we got that every week, that would be an amazing week. If we add Facebook on just to see how it's fared overnight, here we have Facebook in the orange and clear-cut jump up to 9%. And if we throw on Apple, Apple also crushed its earnings, up 9.5%, outperforming on all cylinders. All sales segments look strong. iPhones, EarPods, everything looks great for Apple. We throw on Amazon, also great returns. Great earnings report, up 5.5%. And Google is the only one that's slightly disappointed, being down about 2.8%. Here we go. So if we look out over the year to date, again, whereas the S&P 500 in blue is basically flat on the year, all these companies are up solidly, with Amazon leading the charge 71%. And here we have Alphabet only at a modest 10% gain halfway through the year, which is really pretty phenomenal numbers. And if we throw on Microsoft, which is all part of this equation, and they reported about a week ago, Microsoft is up 26% year to date. And again, we keep going out further and further. Let's say, look at a 5-year chart. We got Amazon up almost 500%, and the laggard here is Alphabet, only up 132%. And earlier in the chart, I threw in Best Buy, which is a retail store. People say retail's dead. Now it's retail in consumer electronics. But here you got Best Buy that has outperformed even Facebook and Alphabet. So it's held its own throughout this entire segment, doing pretty well as far as a retail sales store goes. Online numbers were pretty fantastic. But let's go ahead and stick to the more pure tech companies, and we will take a look at PE ratios. So let's go to straight PE ratios here. This is a 5-year chart, and I'd rather go year to date so you can kind of see some of the trends. So here we have, and these are percentage returns. So here we have PE ratios for many of these companies are in the 30, 25, 80, 30. So here they're down into the 20s when we had that dip down during our lockdown into the 20s. But you've seen a steady growth from Amazon up to 152. And matter of fact, why don't we even take a look see how PE ratios have done off of the bottom, and what kind of percentage growth at the bottom of the market was March 23rd. So these PEs have expanded by 83%, 80%, 79, 50, 46, 37. Those are some pretty big PE expansions. Now with the low interest rates, that kind of makes sense. Powell said we're going to have low interest rates for the foreseeable future. So if we start to see interest rates come up, you might want to be a little cautious on some of these names, because you're probably going to get PE compression at that point, which would drive the stock price down. But let's not ruin the party right now. Here we have some PEs that are pretty reasonably justifiable in the 30s given the low interest rates. But also a fun little chart to look at is market cap. So here we have the market cap, and I'm going to go out 1 year. We've got Apple, $1.7 trillion. We've got Amazon, $1.6 trillion. We've got Microsoft, $1.5 trillion. And then Alphabet, barely making it over the $1 trillion club. And it was September 12th, I think, was the day where, there's a $1 trillion number. Here we go. Looks like Microsoft was well over $1 trillion throughout here. Let's go back 3 years and see when that date was. Oh, there it is, $1 trillion. So January of 19, so a little over a year and a half ago, we hit our first $1 trillion mark number, and now here we are with 4 companies well over $1 trillion and one approaching $2 trillion. On growth, but also on PE expansion. So you're starting to see a little bit of a rotation from tech to value. And so I'd be cautious. If we start seeing interest rates, you might see a longer term rotation from technology into value companies and dividend paying stocks. So be wary for that. All right. So this is Stuart Cruz with Cruz Asset Management's video chart of the day. And don't forget to invest with the odds in your favor.